Now, it's definitely been a while since we've done an in-depth look at Amazon stock. And as such, I've been getting a lot of questions asking me whether I still think that it's a good buy even here in 2021 after the stock has already climbed by so much, and considering that the economy is looking pretty fragile right now, is this still a good time to be buying Amazon stock at these higher levels? Now, it's not an easy question to answer, and a lot of people have different strategies and goals in the stock market, but as someone who is a long-term investor and also as someone who already owns a very large position in Amazon, it's currently my third largest stock, only behind Microsoft and Tesla. I'm going to give you guys my honest opinion on where Amazon is right now, where I think they're heading in the future, whether I think the stock is still a buy at these levels, whether I think it's all justified, and of course, I'll let you know, as always, what I'm going to be doing with this stock myself here in the short term, medium term, and well into the future. But I hope you guys enjoy this video. Make sure you hit the like button if you do. Should be a fun one. Let's go ahead and start by taking a look at the stock. Let's see how scary that valuation is looking right now. And I'll talk about whether I think it's justified based on what Amazon is doing right now as a company and a business and what they plan to do in the future. We'll take a look at competition. We're going to look at a lot of different things for Amazon. If you're a shareholder or you're thinking about buying Amazon or even interested at all in the stock, you definitely want to watch this video. So it's going to be fun. Let's go ahead and jump into it. Let's take a look at that stock. Okay, well, looking at the past 5 years, the stock has performed insanely well, climbing from a low of just about $700 to now being worth around $3,200, near an all-time high. That's an increase of over 350%. And what's crazy is that I used to put out many videos when the stock was less than $1,000 saying that it'll easily surpass 1,000. Then I said 2,000. Then I said 3,000, and I've even predicted as high as above 4,000, but all along the way I've had countless people calling me dumb for making those predictions, but I just felt that it was inevitable for such a giant and dominant company to only become larger over time, which we will talk more about in just a second. But in any case, at its current price, the valuation is indeed extremely rich, as they currently trade for a market cap of over $1.6 trillion. They also hold a trailing P ratio of over 61 and a forward P ratio of over 53. If you're not too familiar with these type of metrics, just know that they are generally considered to be very high at those levels. But once you factor in future growth, their PEG ratio actually comes in at just 1.3, which I do feel you could pretty much consider that to be undervalued for such a giant and dominant company. Typically, you would want that PEG ratio to be around 1 or less, but considering that it's Amazon, 1.3 is actually very good. In fact, when we compare Amazon to some other very popular stocks in the market, like the rest of the FANG group, or even add in some Microsoft, Nvidia, Tesla, and Disney, well, we get some pretty high PEGs, with Amazon actually coming in at the second lowest out of all of them, with only Facebook being cheaper. So just think about that for a second. Amazon is actually cheaper than Disney, Nvidia, or even Netflix. That's pretty crazy. I mean, I'm sorry, but there's no way that Amazon should be cheaper than Netflix on almost any metric, let alone such an important one like the PEG ratio that takes profit growth into account. Amazon is a massively larger company that is also much more diversified than Netflix and should therefore be more expensive. That's really where Amazon outshines everyone, because of that massive diversified size, and yet they still continue to put up amazing growth that sometimes rivals much smaller companies. When looking at sales, they did close to $400 billion last year on growth of 37%, and are still expected to grow by 27% this year and still 19% next year, reaching over $500 billion in just a single year of sales. That is insane. It's extremely rare that you find giant companies like that still putting up growth numbers like this. Now, having said that, sales don't exactly translate to profits, and that's probably one of the most critical things of Amazon, which you can see right on this chart of sales in green and profits in blue. The profits are only a tiny portion of their sales. That's the thing about Amazon. They don't really focus on profitability because they realize that it takes money to make money, so they continuously reinvest their profits back into the business so that they can continue to grow and dominate their markets, all while staying at the very top and fending off competition, which we're about to dive deeper into in just a second. But this is a really good place to start because you're probably getting now a good idea of what type of stock and company we're dealing with here. Now, when you just look at the numbers, you're probably thinking to yourself, okay, this is a stock that is very expensive, but their financials are insane. This is quickly becoming a gigantic monster that is kind of like, I like to think of it as like a genie in a bottle, in that the Amazon genie has already been let out of that bottle, and I'm sorry, but you're not getting that thing back in there. They're just too large and too powerful to ever really be disrupted or dethroned or destroyed in any kind of major way, at least not anytime soon. Now, granted, anything can happen in the future, and you might have some regulatory pressure to maybe break up Amazon into smaller pieces, or you might have some smaller competitors start to chip away at some of their market share. But well, let's actually talk about those things right now, because I still think Amazon is just too large for any of those things to even really matter when looking at the stock long term. So let's talk about that. First of all, good luck splitting up Amazon and thinking that that's going to all of a sudden make them dramatically weaker. Any pieces you break apart are already too large to even matter, at least in my opinion. You look at their e-commerce section, and according to eMarketer, they already control over 40% of the US market, with really nobody else even coming close. Their next closest competitor is Walmart at just 7%, and virtually everybody else is either around 4%, 2%, or even less. And with that massive size, you'd think that Amazon would be struggling to grow, but that couldn't be further from the truth. In fact, last year, their e-commerce sales grew by a gigantic 44%. And even this year, they're still expected to grow by double digits, despite already having such an unbelievably monstrous year before. Now, granted, a giant reason for that is because of the pepperoni lockdowns and people being too afraid to leave their homes. So instead, they've been making purchases of everything they need online. But if anything, the whole global health issue is only speeding up Amazon's inevitable takeover of retail that I think was going to happen regardless. And it's only really making them stronger, but in a faster way. Then you move on to the red hot cloud computing market that grew by 35% last quarter, and Amazon controls over 30% of the entire worldwide market, with Microsoft and Google coming in at number 2 and number 3 at just 19% and 7% respectively. Not too long ago, Jeff Bezos talked about how it's taken around 7 years for companies to start taking cloud computing seriously, which has already led to a giant head start for them, making it very difficult for competition to match AWS's more evolved and functionality-rich platform. And you can see the result of that on this chart here. Not only does AWS continue to experience high growth every quarter, but they're also one of the most profitable parts of Amazon's business, as you can see on that orange line there showing operating profit. And then you add on digital advertising, you're talking about even higher growth than even the previous two parts of their business. According to the Wall Street Journal, Amazon has now broken into the double-digit market share percentage for digital advertising, which is up from less than 8% the year prior, which has long been controlled in a sort of duopoly by Google and Facebook. As a whole, Amazon's US ad revenue grew a massive 53% year over year in 2020. And while you could argue that, like other parts of their business, the pepperoni lockdowns are helping that growth, it's like I said before, these are inevitable trends that have only been sped up, and they were going to happen anyway. In fact, analysts at eMarketer state this is one of these situations where the pan accelerated something that was happening anyway. We're expecting pretty notable continued gains in share through at least 2023. And all of this isn't even mentioning the countless other things that Amazon is doing, like the fact that they have their own gaming division, which is also going to be a high growth market well into the future. They have Amazon Prime Video to compete with the likes of Netflix and Disney Plus, which the Observer notes that out of the over 200 million Prime subscribers, around 175 million of them use the Prime Video platform. So that's a huge user base. And by the way, it's even being reported now that Amazon is trying to acquire MGM, which would give them even more blockbuster content and IPs, including James Bond and Rocky. And there's a number of other things that we could go deeper into that Amazon is either already doing or that they plan to do in the future. But the point is, no matter how you break up Amazon or how many competitors you throw at them, I still just think they're too big to not be able to overcome any of those challenges. And even if you break up Amazon from their e-commerce or from their cloud computing or maybe their digital advertising business or even their Prime Video, if you're a shareholder, you're almost certainly going to be holding on to the stock no matter what it is. I think all those different parts of Amazon's business have a lot of unique value, and Amazon as a whole continues to subsidize any part of their business that needs the most cash or needs the most help. That's what makes it such a great company and a stock. And I think that's why it's a very easy stock to actually invest in, and it's certainly been the case over the past decade that you could have really bought at any price and it would have been most likely a very solid investment if you're thinking long term. Now, that's just my opinion. But for me, Amazon stock is just one of those that is so easy to invest in because it is such a reliable company. So I can pretty much buy it at any level I want. And if it dips or drops, all I got to do is buy more. And sure, it would be great to time it perfect and buy on the biggest dips and maybe during a crash or even a recession. Although the last recession, Amazon wasn't all that affected, right? They reported record sales even during the last recession. But in the general sense, yeah, it's best to buy when it's kind of going down. But you don't really need to overcomplicate it with Amazon. That's at least my opinion. It's a stock that I can buy at any level. And if it drops, all I got to do is buy more because I'm thinking long term. It's a company I think is going to continue to dominate into the future. So keeping it simple, no reason to overcomplicate it. For me, it's a buy. I buy the stock, and if it drops more, I buy even more, lower my cost basis, and it's a great investment long term. Now, having said all of that, what am I personally doing right now with Amazon stock and with my position? Well, it's already my third largest stock, and contrary to maybe popular belief out there, you do not have to own your entire portfolio in a single stock, so I don't need to buy more Amazon stock right now. I'm very happy with my position. I've built out the position that I want. If it drops or experiences some volatility, sure, I'll buy some more. But even at these levels, I still like it. And if I did not already own Amazon stock, or maybe if my position was not as large as I want it to be, I would absolutely be buying even at these levels. And if it dips or drops, I'd buy even more. I have no issue with it. I think it's very justified. And I compared it to other valuations out there. I showed you what they're doing as a company. I expressed to you my feelings on where I think they're heading in the future and how dominant of a company they are. I have no issue buying the stock at today's levels or lower or anywhere around these levels all throughout this year in 2021 and into the future. Anyway, those are my thoughts and opinions on Amazon stock. Obviously, I'm bullish. I'll pretty much always have been on Amazon. Before I finish the video, I do just want to quickly touch on AT&T, because they did just recently announce that they are pretty much going to be cutting their dividend. And as you guys know, AT&T is a stock that I own myself. So I've been getting some questions asking for my thoughts on everything going on. I still have to do some more research, but I promise you I'm making a video for that. I would never leave you guys hanging there. You know, it's a stock that I own. It's a stock I talk about on the channel. Of course, I'm going to address this. First kind of initial quick reaction or thoughts about it. I don't like it. I personally own AT&T stock for the dividend, so this makes AT&T stock way less attractive to me. It's possible I might be selling some stock. We'll see. I got to do a little bit more research, figure out exactly what's going on here, and then I can give you guys a more kind of deep or more complete opinion on this. So it'll almost certainly be the very next video that I upload on the channel, so hang in there. It's coming. Maybe just know for now that I'm not the biggest fan of it, but we'll see. I got to look a little bit deeper. Maybe my opinion will change as I do a little more research. So just hang in there for that. And I think that's about it. So anyway, thank you guys for watching the video. I appreciate all the support. Hit that like button if you did enjoy it. I'll catch you guys in the next one. Let me know down below. Are you invested in Amazon, thinking about it? Let me know your thoughts. I'd love to hear those as well. Okay, I'll see you guys later. Take care. Bye-bye.